what's happening to global markets. And Michael Every, head of financial markets research for Asia Pacific at Rabobank, joins us right now on the phone line. Michael, good having you. Thank you so much for speaking to us at Bloomberg Quint India. The last 2 days, save for the US-Mexico talks going a bit awry, have been largely decent for the financial markets. The fact that crude prices have fallen doesn't hurt markets like India too. What have you made of the recent moves, and what do you think happens next now?
Well, let's separate, shall we, between the real and the fake, if we will, given that we have a lot of discussions around the world about fake news. The real is the oil price, and that is absolutely, unquestioningly, something that's good for the Indian economy and should be bullish. So no questions about that. That's real. The fake is the general market reaction to the, quite ridiculous U-turn that the US Federal Reserve are making, looking at all the same data that a few months ago had them saying, well, we're going to keep raising rates, now saying, yes, well, we're going to be cutting rates. Because if they are reacting to a shift in the data, it's something we haven't seen yet, which should actually scare us. And if they're merely reacting to the trade tensions, which are continuing to escalate all around the world, well, I'm sorry, I simply don't buy the logic that a breakdown in global supply chains, US-China tension, US-Mexico tension, et cetera, is all suddenly going to go away because we might have another 25 or 50 basis points of interest rate cuts. It's quite ridiculous to compare the two.
Well, I think you make a very important distinction out there. So, Michael, my question to you is, what would you be monitoring from a financial markets perspective in the Asia-Pacific region more closely? The trade talks wherein the expectation is not too high, or the renewed conversation about the Fed being more accommodative than what was believed earlier? What would be the more important parameter?
Well, in the short term, it's going to continue to be the Fed, but I'm someone who tries to look a little bit deeper than that at the underlying things. So you can't deny the fact that if the Fed are now openly talking about cutting rates aggressively and even floating the fact that they'll do QE again, which, by the way, is no surprise. I'm one of the cynics who's been saying all along, how long until we get the next round of Fed QE rather than that's done and dusted and they'll unwind their balance sheet. I never believed for a moment they could achieve that. That is important. But on an underlying basis, I think that the real world, the real economy impact of the US and China moving towards absolute loggerheads is vastly more important. And that's where you have to differentiate, because on one level you say it's positive that the oil price is lower for India. That's true. On another, there's this universal knee-jerk tick higher in markets when the Fed starts to look more dovish. Yeah, that's good for India too. But this US-China thing, I don't see many scenarios where India doesn't benefit from that. So that can actually be bullish for India against a backdrop where, frankly, I don't see a lot else to be bullish about.
Okay, Michael, actually that was my last question, and that was going to be my question really. India has got these idiosyncratic issues in NBFCs, etc., and all of that, but we have the policy decision by the central bank, which is expected to be dovish. Crude prices, as you mentioned, is the real thing that has happened, and that should be unquestionably positive. But valuations are stretched. Under all circumstances, valuations appear stretched. What's your view on what Indian markets do over the course of the next 6 to 9 odd months? Ceteris paribus, of course.
Well, may I dodge that question by answering in a different way?
Sure.
I don't want to talk specifically about India or specifically about the market, but a more general point is I actually don't look at the equity markets, if I'm blunt. I look at the bond markets. If I want to have any idea about what's going to be happening in the future, I look at the bond market, particularly the US Treasury curve. That tells me so much more about what I need to know about the world, and I would strongly recommend everyone else to follow the same course.